Positively this morning, bonds and equities sold off spectacularly on Thursday and Friday last week following the removal of Nhlanhla Nene from the post. The rand skidded to those all-time lows against the US dollar, but today proved more positive, at least earlier in the day. Let's take a look.
After markets bled out in the latter part of last week, banking stocks rose over 16% following declines of close on 20%. The bond market, which determines the cost of borrowing, saw interest rates come down by over 100 basis points. In the days after the Nene announcement, they hiked up by nearly 200 basis points. The rand cheered, firming by 5% on the day, although it bounced between strength and weakness during the day. Values had not necessarily returned to pre-Nene announcement levels, but they were moving in a positive direction. And there's a feeling that South Africa's capital markets will overcome the latest drama. But there are concerns about the real economy.
They really can recover if enough liquidity is added into the system by the Europeans and the Americans. What I'm more worried about is the value of the rand. Where it ends up will determine what's going to happen to inflation and to interest rates next year. And even at today's better level, we're still looking at inflation ending up more like 7% next year instead of the 6% that we were hoping for.
The rand is likely to remain vulnerable to weakness. This as the US Fed makes a call on interest rates this Wednesday. The expectation is that it will lift rates, which would result in a stronger dollar. A stronger dollar will run the risk of weaker emerging market currencies. With the rand already relatively weak, analysts are warning interest rates could rise faster and steeper soon. Nompumelelo Siziba, SABC News, Johannesburg.
So the JSE